bullish, you're going to see things that say bearish. You're going to see things that say 200-day is moving up, 200-day is moving down. In time, you're going to learn what that means, and it's going to help you understand and see the market so much clearer. So most people don't even know what the bull and the bear actually mean. So if you look at my logo here, and this is just my logo for my GPT, but my logo has always looked similar to this. Most people don't realize there's a bear on my shoulder and then there's a bull on my other shoulder. I got that idea from like the angel on the shoulder and the devil, right? Most people don't get it. So sometimes I go to a level that people just don't get. And I thought it was clever, but nobody got it. But I have a bull on one shoulder and I have a bear on another shoulder because they're always in conflict with each other, just like the angel and the devil. All right. So I got a bull and a bear. Bulls in the market expect things to go up in value. Bullish companies. Bears or a bearish company is a company that's going down or someone that's bearish on the market. Now, most people, when they first come into the market, they don't understand bullish or bearish. They just think of, because we always buy low and sell high no matter what it is. If I go to the store and I see t-shirts and they normally go for $10, Joel, and I see them going for $5, I'm bullish on it because it's on sale. And you guys come into the market with that same concept. You see a great company that you heard about for years. Joel, it's Disney. Joel, it's Nike. Disney and Nike has been a staple in our community forever. I'm going to buy some for I'm going to buy some, right? And then you're surprised when the stock is down 3 or 4 months. You had no idea you were buying a bearish company. How do you know that it's a bearish company? There's a definition. As an investor, listen to this. This is extremely important when you start buying and selling stocks. If I look at today's date, and today's date is January the 5th, I think. And if I was to go back 1 year and the stock that I was buying, if I go back a complete year, and if that stock is not up at least 1 penny from the purchase from the price that I purchased it from, if it's less than a penny, that means if I bought it and it's actually not making any money, that company is considered bearish. If I look back a year from now and I see that the stock is actually up 20 or 30%, but it's down some, now you're buying a bullish company that's on sale. The problem that most of you guys make is because you've never looked at a chart. You think just because the stock is down in price that it's on sale, not knowing that you're buying a bearish stock. Now, why am I telling you all this? Because mutual funds, pension funds, the people that actually move the market, not Cousin Al, they tend to want to stay away from companies that can't be profitable over 1 year. If your company for the last year, if I bought your stock a year ago and you mean to tell me you had a whole year to get it right, and the investment that I made, I didn't make absolutely anything, why should I still own your company? So get me out of it. You guys don't do that. You come into the market, you don't do any research. You see Disney is down in price. You see Nike is down in price. You use your common sense and you say everybody buys Nikes, Jordan, well, I don't know if Jordan Brand's with them anymore, but everybody buys Nike. It's a staple in our community. I was just at the Disney park. Avatar just came out. Shouldn't I be buying Disney now, Joel? Well, was Disney up in price over the last year? Because if it wasn't, Joel ain't buying it. Joel also has a winning percentage that's higher than 90% when it comes to investing. Now, my day trading and swing trading percentage is right around 77.8%. But y'all know what the average is? The average stock trends to the upside 80% of the time. 20% of the time it goes flat to down. 80% of the time the stock market is going up. Listen to what I'm saying. 80% of the time the stock market is going up. I'm going to say that a third time. 80% of the time the stock market is going up. So you're like, hold up, Joel, you done said that 3 times and I realized that you said 80%, which is a high number. And I'm like, yeah. So why are you afraid to invest in the market if 80% of the time it's going up? 80% of the time it's going up, but you're afraid to buy a stock. But 80% of the time it's going up. So there are 2 factors that we're talking about. You might hear 80% of the time the stock market is going up. But where newbies come in is they'll go buy a Disney or a Nike because they heard Joel say 80% of the time the market is going up. But you're not dealing with a bullish company right now. You're dealing with a bearish company. Bearish companies tend to keep going down until they figure out what's going on and then turn back around. So I tend to just stay away from them. So I have to recognize a bullish or a bearish company first. There's nothing wrong with buying a bearish company. I do it all the time, but I know that it's bearish. That means even though it didn't make any money in the last year, I'm fine with it going down for another year. I'm fine with it not making any money. But a lot of you guys don't have, you guys can't be in that particular situation. A lot of you guys need to have that be profitable immediately, but you didn't know. You had no idea. So that's why I teach you guys how to first define what's bullish or bearish and then know what to look for. Now, if you haven't downloaded this yet, then you're playing. Now, I'm only not going to get upset with anyone that just came in today or maybe within this week. But if you've been following me for about 60 days and you still ain't download this, you playing, you ain't really trying to make money in this game. Maybe you just here to support Joel, which is fine with me, but you ain't here to make money. Because this is what we're using to analyze these companies very, very quickly. Now, if you're an advanced trader, I get that. But I'm talking about my newbies who claim they trying to be part of the Millionaire Challenge and you didn't even do the first step. And I ain't even getting paid off this. This is a free app. Download it. This is what I teach to my 5th graders. Now, someone said those charts are confusing. All right, that's why we're going to break it down. They're supposed to be confusing. They're actually not confusing. And I'm not trying to be funny. I'm just telling you that it's just a graph. The way charts work is you're going to see a stock. You're going to see the price of the stock and you're going to see the time. Price is going to be on the right. Time is going to be on the left. So let's say I'm looking at a chart that's going from 2003 to 2025. Well, we know that that's 22 years of information. If you see that stock chart going like this, that means it's making money 80% of the time. All right. If you see it going down, it's bearish. If you see it going up, it's bullish. Now, here's a fun fact. If you've ever been in Chicago and you're into sports, you're going to see that the Chicago has a mascot. The football team are the Chicago Bears. The basketball team are the Chicago Bulls. What a lot of people don't realize is there is a exchange, the second largest exchange in the world. So an exchange is like where stocks are being bought and sold. So we have what's called the Chicago Mercantile Exchange, which is located in Chicago. It's the second largest exchange in the world. Number 1 is New York Stock Exchange, which is in New York. The reason why the mascots are the Bulls and the Bears is because of this exchange, the Chicago Mercantile Exchange, and because of the stock market, the Bulls and the Bears. A lot of people didn't know that. All right. I know, fun fact, right? So I want you guys to think about that when you're thinking about Bulls. Bulls is a company that's going up in price. By definition for an investment, because it is depending on time. Because if I was a day trader, I'm trying to find out if the company is bullish or bearish, but we're not going there yet. I'm talking to my beginners. So the definition of a stock in the stock world, if we're defining a bullish or bearish company, it's going to be set for 1 year. And that stock, wherever the price is today, it has to be higher than the price that you bought it for 12 months ago. If it's not higher by 1 penny, then that company is considered bearish. I want you guys to stay away from those companies in the beginning. When you get good like me, then you can learn how to buy bearish companies. But for now, I'm trying to put you guys on the right side of making or giving you guys the edge. If I know 80% of the time bullish companies are going to go up, then you need to stick with those numbers. So at least 80% of the time when you're picking stocks, you're going to be okay, even if it might not be the best, the best stock that's out there. All right. This is a stock chart. All right. Now, this is how simple it's going to be to read this particular chart. I'm going to make it really, really big. When you pull up a stock chart on Yahoo Finance, for example, we're going to type in a ticker symbol. So let's say we were looking at Microsoft. If we were pulling up Microsoft, we're going to go to Yahoo Finance. We're going to type Microsoft in the search tab. And when we type Microsoft in the search tab, you're going to see a ticker symbol that pops up that says MSFT. When you see that MSFT, you click on it. Now, every company that's out there, you're not going to be able to invest in. So, for example, I've been trying to invest in Chick-fil-A and Enterprise Rental Car for years, but I'm not able to because those companies are private. You can't buy those companies unless you kind of like know somebody or you work for the company. So you can't, it's not a publicly traded company. Microsoft is a publicly traded company. You'll know if it's public or private because when you type in Microsoft, it's going to say public or private. If it says public, that means that you can invest in that company from between 9:30 a.m. and 4 o'clock p.m. Whatever the stock price is at that particular time, if you have $207.88, and this is an old chart, guys. This chart, I created this chart like back in 2021, but I liked it because it was white. If you have $207 and you want to own a full share, you can. These days, you don't even have to be able to buy a full share. If I want to buy $10 worth of Microsoft, I can. If I'm on platforms like The Hood, which is ROBIN, The Hood, or if I was on something like a Fidelity that does what we call fractional shares or M1 Finance. We talked about that earlier in the week. Stock price is an illusion. Stop being afraid to buy a stock because you feel like you don't have enough funds. If you got $10 or even $1, you can be buying stocks. You can buy stocks with $1. $1. And that doesn't mean that it's $1 a share. I can buy $1 worth of Microsoft if I want to. So some people are like, well, is it even worth investing in? Well, that's where you're going to start educating yourself. What if I made a 3,000% return? Someone in the comments section tell me if I invested in a company with $1 and it grew 3,000%, how much is that dollar going to be worth? If I had $1 and I invested in a company and it went up 3,000%, how much would that be worth? Well, 100% would be double, which is what, $1 to $2. So 1,000% would take that $1 to $10. A 3,000% would take that $1. Nah, it would actually take that $1 to $30. It's like 30 times your money. So it might not mean that much to you, but start adding zeros. So if I invested 100, Joel, that can be worth you. $3,000. Well, that's what a 3,000% return looks like. Okay. Imagine if you had 10,000 invested in something and it grows 3,000%. You become a millionaire. I know some of you guys are like, nobody out here is making 3,000% returns, Joel. Why are you even out here playing, talking about these freaking numbers? Well, let me show you something. Let me show you something. What do you guys see right here? What does that say right there? Look at it with your own corneas. What percentage is that, guys? That's a 3,400% return. And I'm a human. And I'm not 97 years old. And I earned a 3,400% return in NVIDIA. My son has like a 2,000% return. And he only 19 years old. Okay. Someone asked over what time period. I bought this back in 2016. So I would say, 8 years? 8 years. Wait, Joel. You telling me I could have invested $10,000 and didn't do nothing, and then 8 years later it would have been worth like $3 million? Yeah. That's exactly what I'm telling you. Actually, 300. Yeah. It's now the largest company on the planet. NVIDIA is the largest company on the planet. And a lot of you guys didn't even know that. Y'all are like, what's NVIDIA? What did they do? Oh, you remember when Cousin Al said that AI was a bubble? Well, this company is leading the whole AI everything. Ask Cousin Al if he got even 100% return in NVIDIA. Cousin Al's so afraid of the market, he just want to get 3% a year. Somebody tell me, if I had a CD and I had my money in a CD, tell me how long it will take to get a 3,000% return in it. Because that's what Cousin Al is telling you to do. Like what is that, 100 years? I'm not waiting 100 years to get 3%. That's not even 100. I think it's 1,000. I don't even think it's 100. I think it's 1,000. Yeah, because a 3% return times 1,000 is a 3,000% return. It will take me 1,000 years to do what Uncle Al is telling me to do. And this is what y'all doing. 1,000 years. What I did in 8 years, Uncle Al gonna do in 1,000. You talking about the tortoise and the hare. Oh, I see what you're saying. Compounding. You're right. I'm just talking numbers to numbers. You're right. That's why you got a fact check. Way less, but still is longer than 100 years. SoFi, I'm up 400%. Curaleaf, it's a cannabis company. Please don't buy this list. Please don't buy this list because Joel bought it, all right? Palantir, cybersecurity company that has a contract with the government, 160%. Everybody knows Walmart. Hold up, Joel. You mean to tell me I got my money sitting over here in a CD in Walmart that I go to every week and get my bananas? And my coffee is up 150%. How long did it take you to get that 150% in Walmart, Joe? Oh, a year. What? Reddit, silver. Guys, I got this 100% return in silver in August, September, October, November, December, January, February. In 6 months. In 6 months, I got 100% return in a precious metal that you guys tell me not to buy. I hate seeing the youth go out there and buy all them gold chains. Look at Run DMC. I hate when they just go out there and just spend all that money on useless things. It's Uncle Al telling you that, right? Uncle Al's telling you not to buy gold and silver, right? Does Uncle Al know that gold and silver are at all-time highs right now? Do you know how much one of those Run DMC chains is worth today? Versus how much they paid for it back in the 80s? You're listening to you're listening to scared money that don't know what they talking about. Don't buy gold and silver? Are you kidding me? So what's the purpose of buying a diamond for my wife when I was engaged? Like, why am I buying that engagement ring? If precious metals don't go up in value, it's because you're listening to the wrong people. If you look back in history and look at the kings and you look at the kings that were roaming this earth, all they did was buy gold and silver because that was wealth. That was the first currency. And you listening to Cousin Al tell you not to buy gold and silver because it's going to make you look like you from the hood? You're listening to the wrong thing. You're listening to the wrong people. You're not understanding value. You don't understand how things go up in value and what things go up in value. Gold and silver are at the highest price than they've ever been in history right now. And they telling you not to buy it. Oh, don't go buy them Birkin bags. I hate when Cardi B go and buy them Birkin bags. Look at how she look. She just looks silly with that $30,000 bag. That $30,000 bag is appreciating at 20 to 30% a year. You don't know that because you a thousandaire. It's your bias. You see people that are finally buying the things that actually go up in value, and the whole world has taught you to not believe in those things. You're talking to the wrong people. Some people already came in here was like, oh, he black, he don't know nothing about finance, and left the room. Bias. It's a real thing. Oh, he got on a t-shirt and some shades. He don't know nothing about no money. I got a 3,400% return. Bias. Bias is real, people. Bias is a real thing. You got to get over that bias. You got to start listening to the individuals that understand value. Why did I leave this up there like that? Because a lot of you guys don't think that it's attainable. You actually are like, oh, 400% return. That can never happen to me. I'd rather just go buy this bond. And I get it if you're 75 or 80. But if you're 10 or 15 years old and you talking about buying a bond, are you kidding me right now? You got your whole life for things to go wrong. Nobody under 25 years old should be in dividend stocks or bonds. Not when you got companies growing 1,000%. You're missing out on why the stock market was even created in the first place. And you're missing out on funds because A, you're not in a community where you actually meet people that are actually getting these returns. And it's not some secret society. Guys, Walmart was up 150%. Why do I need to be in a CD making 3% when Walmart's going up 150%? Well, what if it goes down? Is Walmart going to zero? Do you actually believe Walmart is going to zero? Do you really? But you're afraid to buy it. All right. This is for pure entertainment, guys. I'm actually a really nice guy. I just have to make sure that you guys understand it. You guys got to understand this. This is my way of making you understand it. You got to look yourself in the mirror and realize the silly decisions you've been making. I done spent $4,000 on TikTok and ain't a dang person supporting me. Well, you know what $4,000 could have done in the stock market? You know what $4,000 could have done if you had it in Walmart? It'll be worth about $6,500 in the last year. Walmart will support you. Ricky say, who got me tripping? The market. If you don't know, this is just how I am. This is how I make you understand this stuff. This is how I make you understand. We gotta make fun of ourselves. We gotta make fun of Cousin Al. We gotta make fun of these people that are stopping you from making these gains. We have to. Now it's the top of the hour, so I'm gonna do this for 5 more minutes. Let me show you guys a couple of my winners. So these are a couple of my winners: Palantir, Walmart. On you guys have been in Reddit rooms, right? Silver. Tesla, whether you like Elon or not. I show this because I feel like I owe this to you. If you're going to follow me and listen to me and listen to some of the education that I have, I feel like I owe you some type of transparency. Some type of transparency. Even my Bitcoin is up 88%. A lot of you guys didn't know you can buy that in stock. I do this all the time. These are my losers. These are my losers. The only losers I have in my portfolio right now is Wingstop, which is only down 12%. I'm teaching you guys not to sit in something when it's 90% down. Learn how to be in things that are going up longer and I want you guys to be allergic to redness. I don't want to see red at all in my portfolio. I want to be in bullish companies for as long as I can. You guys have very, very high tolerances of not wanting to be wrong. You will stay in a company for 4 years so you won't tell your spouse that you're losing on that particular trade. Get over yourself. Get over yourself. You see, my biggest loser is down 12%. And I'm looking at it like Wingstop. I just had Wingstop 2 days ago, guys. Wifey brought Wingstop to the house. I was like, man, these are the best lemon pepper wings I ever. These fries, oh my God. But just because I love the chicken, don't mean I need to own the stock. I know you feel exposed. I make jokes because what I'm doing, guys, if you hear a lot of anger in my voice, if you hear me sitting on one point for a very long time, it's because I made that mistake. I'm so upset with myself that I let time go by because of the ignorance that I used to have about the market. So I don't want you guys to take that energy as negative. I want you to take that energy as this is therapeutic for him. This is therapeutic for him to allow him to vent over the mistakes he made. And I sure don't want to make the same mistakes he made. Because look at how he acting up there. He acting a fool. A plump fool. I done left the room and came back 6 times and he talking about the same thing. All right. So Netflix, I just purchased recently. I'm down 7%. Costco, 6%. Microsoft, 4%. And then these are my losers too, guys. I'm mad at these companies and they up 13%. And I'm mad. I'm like, UNH, you need to do something. 13% ain't gonna cut it, sir. Spotify, what's going on, Spotify? I thought y'all numbers was going up. What's going on? If I look at a chart and I find that one of these companies didn't make any money over the last year, I am cutting them. Period. People ask me all the time, when are you going to cut? When do you know when to sell your stock, Joel? If that company year over year can't make me 1 penny, then it has no need to be in my portfolio. That's it. How do you know when to sell? Did it make me any money in the last year? No, it was down only $10. Cut it. It was only up $10. All right, it at least made some money. I'll give it a chance. After 1 year, gone. Get out of my portfolio. All right, that's just how I operate. I operate the same way when I'm looking at my golf clubs. If I buy a golf club and everybody always say, Joel, it's not the golf club, it's you. Whatever, it's the golf club. If I practice 10 hours, if I practice 10 hours a week and 13 clubs is acting right and I go buy a new club and that club ain't acting right, it's the club. And I prove to everybody it's the club. Joel, it's not the club. Joel, I don't know why you buy a different club every month. Well, there is a championship trophy sitting to my right. I am the Atlanta Tour champion. See, I'm all about receipts. You can complain and have your theory all you want. But once I won that championship, you should have said, you know what? Joel might have been on to something. He kept saying, I practice too much for this club not to work. See, a lot of you guys try to make things work all the time when you know in your heart it ain't working. Whether it's a relationship, whether it's friends, whether it's people supporting you on this platform, whether it's a stock, cut it. You're going to be all right. Let them get it together. Go on and get it together. Don't get offended by it. It's just business. Cut them. But if I do that, they might turn around now. Great. Let them turn around. I'll wait. More than likely, they bearish. This club, I'm bearish on this club. This club did not do right for 2 weeks. Therefore, it needs to get sold. But Joel, you spent $400 on that club. So what? Just because I paid $400, I'm going to, if they said, if you sell this club, you're going to win a tour championship. Wouldn't most of you guys sell the club? Some of you guys have paid $20,000 for a stock class. And because you paid $20,000 for a stock class, you refuse to learn anything else. You're trying to make something work that doesn't work because you just made a bad decision. You don't want to accept you made a bad decision or that teacher just stole your money. You don't want to come to the facts that that's what happened. You don't want to believe it. You don't want to feel like you got duped. So what do? You continue taking that terrible class, learning those terrible strategies, buying those terrible stocks, and just hope that it turns around one day. Well, if you just, and what do they keep saying? No, you just got to stick with it. You just got to stick with it and then it's going to work for you. You just got to stick with it and then it's going to work for you. Whatever. If my club ain't working that week, I don't care how much I paid for it. Because in the end, my goal was to win a championship. I don't have time to be dealing with stuff that ain't working. I don't have time to sit in a stock and wait for the CEO to put out the news to make that stock turn around. I don't have time for that. I'm getting too old. I need to make my funds right now, immediately. I want immediate gratification. And anyone that says, oh, you don't just get immediate gratification in the stock market. Oh, yes, you do. Who you talking to? You saw my portfolio. I got 100 stocks. I got 5 losers. Cut those zeros. If you spend most of your time winning, that's the only thing you're going to see. I open my portfolio, I want to see a sea of green. I want to be able to see that the market is down big that day. And I open up my portfolio and I look at my P&Ls and it's just profits. Joe, the sky is falling, the market is going down. My portfolio is green. That should be your philosophy. I want to stick with bullish companies. I want to stick with bullish supporters. I want to stick with bullish live hosts because more than likely they're the ones that's pulling you up. You need to cut the bearish live hosts. You need to cut your bearish supporters. You need to cut your bearish stocks. You need to cut those bearish strategies. They don't work. Now, I'm going to teach you guys how to look for bullish and bearish companies very, very quickly. And then we'll do the engagement. I was supposed to do it at the top of the hour. I'm a little over because I'm explaining how the market works. Now, when you guys go to Yahoo Finance, even you advanced traders that are still stuck, you're like, man, I found this dude's room. He's saying something I like to hear, but I'm sold, but I'm not sold yet. I'm going to get you. Don't worry, I'm going to get you. When you pull up Yahoo Finance, I have this game. We're going to play it on Monday or Tuesday. It's called Mission Impossible. The way the game works is we're going to pull up a stock, and every single solitary person in here, even if they've never looked at a stock or bought a stock ever, you're going to be able to analyze a stock in 1 minute. It's going to be like a magic show because everybody's going to see the same thing. You're going to see for the first time a whole room be on the same page. That's when you know a strategy is working. That's how you test the education that you're getting from all of these other instructors. If the whole room, if more than 51% of the room is confused, you need to get out that room. It should only be like 5 people out of 95. Y'all see in the comment section, there's a couple of people that are like, I'm a little lost. It ain't the whole room. And it's supposed to be that way. So when you pull up Yahoo Finance, you're going to pull up a stock. You're going to look at the 1-year chart or the 5-year chart. If you pull up Microsoft right now, and I want everyone to pull up Microsoft. So if you have Yahoo Finance out in front of you, someone tell me if you're looking at a 1-year chart, is that chart green or red? This is how easy it is to see if a company is bullish or bearish. If the chart is green, it's bullish. If the chart is green, it's bullish. If the chart is green, it's bullish. If it's red, it's bearish. If it's red, it's bearish. The chart already knows how to designate a bullish company versus a bearish company just by colors. And because humans are very, very visual, it's easy to look at this chart, see that it's green, know that you're dealing with a bullish company. You give yourself an edge of making money in this market. This is a chart from 2021. If you looked at this chart, saw that it was green, knew that you were buying a bullish company, say, you know what, I think I'm going to take a chance on Microsoft, you would have made about 100% return from this chart. If the chart was red, Joel says this, if the chart is red, if the 200-day is angled down, you don't want to be around. If it's red, you don't want to be around. If it's green, it increases your luck, right, to go up in price. So someone look up Microsoft right now. This is an old chart. Let me know if it's green or red or if it's bullish. Now, here's the other chart. This is Microsoft today. This was Microsoft 4 years ago. And I was teaching the same thing, the same method. The 1-year chart or the 5-year chart was green. It doesn't mean that you're guaranteed money, but it gives yourself an edge. You're buying a bullish company. You want to buy bullish companies when they're on sale. OK, you want to buy bullish companies when they're on sale, not bearish companies. Bearish companies tend to go down for years. If it didn't make money the first year, it's more than likely probably not going to make money the second year or the third year also. OK, On average. It doesn't mean that happens like that all the time. But if you're new and you don't really know how to use charts, this is the easiest way to make sure that you're at least buying something that people have been buying over the last year or two. So this is the new Microsoft chart. As you can see, it's green and it's bullish. If you pull up Yahoo Finance, guys, today, it's going to tell you over the last year how much Microsoft was up in the last year. Can somebody tell me from their chart, if you bought Microsoft a year ago, how much would your investment be up? Now, you're not going to know the number, the monetary value, because we don't know how much you invest. But anyone that bought Microsoft a year ago today would be up 12%. 11.69%. The 1 year chart is bullish. Now, it doesn't mean that you're guaranteed money the next year. But what it is telling you is that you're buying a bullish company. And I'm going to show you guys something. And when you're buying bullish companies, and we learned about beta yesterday, we want to buy bullish companies like this when they drop 10 or 15%. Because its beta was what? 1 point. Let's see what the beta is. The beta on this, well, that's an old chart. I'm going to delete the old chart. The beta on this chart says that Microsoft has a beta around 1.07. Y'all see that? The average is 1.0. The S&P 500, guys, has a beta of 1.0. I've confused a lot of you guys. Don't worry about it. Just think of it like this. The average stock, if you take the 500 largest companies and you put them in a basket, the economy, if the 500 largest companies together have a beta of about 1.0, it averages, the 500 largest companies for the last 100 years have been averaging about 8 to 10% a year. So if you're invested in something that has a 1.0 beta, chances are you're probably averaging around 9 to 10% a year. Okay. It also tells you about how much it's going to go down in price. Every single solitary stock, guys, especially with a 1.0, I'm not going to say every single one. More than likely, if a stock has a 1.0 beta, what goes up can come down. So usually, if the market's been averaging 8 to 9% moves, 8 to 9% appreciation, more than likely at some point within the next year or two, the economy or the S&P or that stock is going to drop 8 or 9%. So that's how you buy bullish companies on sale. You know it's going to drop 10%. You know that it's bullish, so it gives you the confidence. Remember the 3 C's? You're now going to have the confidence to buy something like a Microsoft, but you're not going to just go out and buy it because it's a $472 today. If you're using my method of getting in and out of these particular stocks, you're going to see, all right, Microsoft is at, it's a 52-week range. So I said we were going to learn about that today too. So every chart, when you pull up Yahoo Finance, you're going to see a range down here. Does everybody see that? Can somebody tell me the lowest price and the highest price of Microsoft in the last year? It's right there on your chart. What was the lowest price and the highest price of Microsoft in the last year? Please tell me in the comment section. The highest price and the lowest price in the last year. Not the beta, the stock price. Exactly. Caffrey D in the place to be gave us the correct answer. The lowest price of Microsoft, whoa, moderator, I think you took my pen down. I'm going to put it back up. All right, so $344 was the lowest price, $555 was the highest. Now, we saw that the beta was 1.0. That's average. That's what the S&P does. So Microsoft with a beta higher than the S&P, it's almost 100% chance that when it hit 555, that it was going to drop 10% from there. So 10% of 555, guys, is $55. That means Joel ain't buying Microsoft unless it dropped to $500 or less, period. Because I'm buying a bullish company on sale. How do I know that it's going to drop 10%? Because its beta is 1.0. If its beta was higher, like 2.0, then I'm going to wait for it to drop like 30% or 40%. If you don't know the beta of your company, you're not going to know how much it drops in price so that you can buy it on sale. A lot of you guys will see a company drop 50% thinking that it's about to go to zero, not realizing it's a high beta company. It's supposed to drop 50%. If you're just buying stock for the first time, you're like, dang, I didn't know stocks drop 50%. Joel, I didn't know cryptocurrency or Bitcoin drops on average 50% every single solitary year for the last 15 years. Y'all know that Bitcoin every year since 2008 dropped a minimum of 50% except for this year. And we're still calculating it. Bitcoin every year since 2008 at some point in 365 days hit a high and dropped a minimum of 50%. The average was like 70. A lot of you guys didn't know that. So when Bitcoin dropped 70%, you didn't know to buy it. How did you know to buy it? Well, if you knew that it was a high beta asset, that's what high beta assets do. Stocks that have a beta in the 2s or higher, it's not if they're going to drop 50%, guys. It's when. But I'm not buying it unless in the last year, like if I look at Bitcoin and a full year goes by and it wasn't up in value, you're not going to catch me buy it 50% down because that means it's in a bear market, which means it can probably go down for a year or 2 years. A lot of you guys are just finding that out today. Bullish companies versus bearish companies. If you're trying to make money in the market to the upside, you want to stick to bullish companies. Companies where Wall Street has bought these companies, and at least in 1 year, the company is up 1 penny from a year ago. If it's down even 1 penny and it's considered a bearish company, it has a very, very hard time going up the next year. It doesn't mean that it can't turn around. There's been plenty of bearish companies, guys, that's turned around and made you fortunes. But a lot of you guys didn't know that you were going to have to be in it for 3 or 4 years for that to happen. You wanted immediate gratification because you didn't know you were buying a bearish company. Now you know the definition of a bullish company and a bearish company. So if you're buying that bearish company, the first thing you should be thinking to yourself is, I'm buying a bearish company, so can I sit in this company even if it drops for a whole nother year? I don't care if it's sitting at a support level. I don't care if it's sitting at at some area that it dropped 3 or 4 years ago. That doesn't necessarily mean that's when it's going to turn around. Joel stays completely away from bearish companies because over the years, I found that they keep going down. I'm going to look at some of you guys as companies, and we're going to look and see if they're bearish or bullish. We're going to look at the one chart and see what it says, and then we're going to look at the 5-year chart and see if we could have stayed out of those companies for 4 or 5 years. Because some of you guys are still in bearish companies not knowing that they bearish. You're just thinking that they're on sale. And you're like, why is it they're not turning around? Because they don't have a catalyst. Wall Street is not confident in the company. And shoot, maybe even the company ain't confident in the company. They're not buying their own shares as they drop. Stay away from bearish companies. It's going to make your winning percentage a lot higher. Now, if you're a trader and you want to short and bet on companies going down, that's a whole nother story. All right. All right, cool. So what I'm going to do is I'm going to pull up my charts. All right. I'm going to do this because it's the 1:30 mark. I'm going to put on some music. I want you guys to engage for one song while I'm pulling up the charts. What I want you guys to do in the comment section is not only do I want you guys to engage with each other, talking about, all right, you're going to see it with your own eyes. All right, so let me go pull up Yahoo Finance. These are the first things that you're going to see on the page. And you guys are learning about it today, right? You're looking at the S&P 500. You're also looking at the Dow. You're looking at the NASDAQ. You're looking at the Russell 2000, the VIX, which is very important. The VIX is going to tell you the temperature of the day. It's going to tell you the weather of the day. What are we experiencing right now? Volatility is more or less like the fear index. We call it the fear index. How afraid are people? People are not that afraid of the market. Anything under a 20, you're probably going to see the market near or at all-time highs. And then you're going to also see gold. These are very important because all of these things work together. All right. Whatever happened over in Venezuela, it really, really affected the market and everything was up in value. The commodities were down. All right. So when you pull up Yahoo Finance, you're going to see that in the right corner. So I'm going to make this smaller so that we can actually see the chart. So you got to bear with me because this is what I have to do on TikTok to make sure that you guys can see the screen. All right, here we go. All right, so you're looking at a stock chart. So when you pull up Yahoo Finance, and the best way to do it is to do it on your own also. So if you're pulling it up on your own page, you should see something that looks similar to this. Okay, so very first stock we're going to look at, moderators, you're going to have to help me with this, even though I know I tell you guys you can go at 7:30. Now, if you can't, I'll go ahead and try to do it on my own. Hold on. Uh-oh, I hit the wrong button. Hold on. Uh-oh, I hit something. Hold on. Cool. But I can't see the comments. Let me see something. Oh, okay. Here we go. All right. Oh, I see UNH. I couldn't see the comments at all. All right. Mad Pac-Man wants us to look at UNH. So UNH is an interesting one because I'm actually in that company as well. So when you pull up UNH, guys, it's going to look like this. We're going to look at the 1-year chart. We're going to look at the 5-year chart, but we're going to pull up the 1-year chart first. So when I pull up the 1-year chart, Yahoo's been giving me the business lately. Come on, Yahoo. You only do this during lives. All right, let's see if we can get it to work now. UNH. There we go. All right, let me see if I see what you guys see. All right, so I'll make that a little smaller so that you guys can see it. All these adjustments. I think that should be okay. See what you guys see. Still, the name is kind of blocked out. All right. All right, so UNH, I'm gonna make it a little bit smaller. Here we go. All right, UNH has a green chart. All right, it's a green chart. I know you guys are saying that it's down. But what is this? Oh, that's a 1-day chart. Let me change it. You're right. Let me change that to a 1-year chart. If you notice, the 1-year chart is red and it's down. I don't know why Yahoo is not working for me on this end. So I might have to use you guys as answers. It's just acting up. Oh, there we go. All right. So not only is it down, can someone tell me how much it's down? Is it down like 20%, 30%? If you notice, it says in the middle of your screen that it's down 30% and it's red. Now, normally I would stay away from a company like this, but guys, it's bearish. This is a bearish company. So if I want to invest in something like this, I see that it hit a low, and guys, I own it too, right? And the only reason why I own this one is because of why it's down. So fundamentally, the stock is down for two reasons. A, their CEO got unalived. You can't say the other word on this platform. And they had some accounting issues. Anytime you hear accounting issues with a company or something happens to maybe the CEO, people sell first and ask questions later. So fundamentally, I bought it for the same reasons you guys bought it. But if there wasn't like serious negative news like that on a company like this, and I see a chart like this, I am just gonna wait. Now, something that can give you guys the confidence of buying it is, let's see what happened over 5 years. So 5 years ago, if I bought this, I still would be down 5 years later. So you have a 1-year chart that's down. You have a 5-year chart that's down. United Health is going to need probably a full year to prove to investors that this is a company. And guys, it's one of the best insurance companies that's out there. So I get why a lot of you would invest in it or buy it, but you're dealing with a bearish company. So when you're dealing with a bearish company, I want you guys to think of bearish companies as injured companies. Like imagine you're a Kansas City fan and you see that your quarterback just, tore his ACL or MCL. You're not going to put that quarterback into the playoffs and try to play on that knee. In fact, you're not going to even feel confident in Patrick Mahomes the very first game of next season. In fact, you're probably not going to even trust his knee for a whole year, even after he gets ACL surgery. It doesn't mean that Patrick Mahomes isn't going to go in the Hall of Fame. It doesn't mean that he can't win another championship. But you got to understand that he's hurt. And because he's hurt, he's not going to operate at 100%. I want to buy companies, guys, even if they've been injured. I want the companies to have rehabbed and had 6 to 10 months of strong profits before I decide that I want to buy them. The charts are the lie detector of what's really going on with the company. If the stock starts to go up in value and you see increased movement in the stock and you hear great fundamentals from the company, then more than likely the polygraph is right and the fundamentals is matching the technicals. Well, the technicals ain't matching the fundamentals of what I'm hearing in this particular company. And this company only got about 3 to 6 more months before I decide I'm going to get out of it. I am up. I'm up like 14%, but that's because I was able to really, really catch that low. So if it ever gets back to like 0 or negative, I am out of UNH because I know what I'm dealing with. I'm dealing with an injured company with a torn ACL. I trust them. I know the company has the brain power to do what it wants to do, but the body's not reacting to what the brain wants to do. I want you guys to look at companies the same exact way. All right, what's another company we need to look at? We got 20 minutes to look at least 10 more companies. All right, GD. All right, let's pull up GD. So when I pull up GD, and remember, guys, this is not the 100% way that I analyze companies. What I'm doing right now is a 30-day challenge that started with beginners who don't even understand the market, who's never bought a stock ever in the history of them buying stock. All right. We're going through the process of taking beginners to at least intermediate traders and investors in 30 days. So advanced traders, anybody that's coming in and out, don't get frustrated. This is what I teach my fifth graders. All right. So let's look at GD again. GD, which is General Dynamics. General Dynamics, I want you guys to let me know, is this a bullish or a bearish company? A bullish or a bearish company? Is it bullish or bearish? What color is this chart? You can use the stickers, or you can use the stickers like Joe did, Joe Butler, or you can put, all right, Sexy 2 Fixer, bullish, bullish, bullish. Everyone and their mama can see that this is bullish. Not only is it bullish, it's up 35%. Let's see if the 5-year chart matches the 1-year chart. So when you pull up the 5-year chart, you're going to notice that General Dynamics was up 140%, guys, in 5 years. That means General Dynamics, guys, is averaging like 30% a year. Even though this company is bullish, let's look at the 52-week range. Can someone tell me what the 52-week range of this company is? That means what was the lowest price and the highest price just from this chart? What was the highest price and the lowest price even with this chart? I see 239. Caffrey, I think Caffrey had the answer last time. All right. 239 was the low. 360 was the high, or 356. No. 360 was the high. So are we closer, guys, to the highest price, or are we closer to the lowest price? Are we closer to the highest price, or are we closer to the lowest price? We are closer to, we dang near at the all-time highs. So guess what? Joel ain't buying no company at the all-time highs, but we got a bullish company. We have a quarterback that doesn't have any injuries, playing extremely well, not injured at all. These are the type of companies I want to jump on. I don't want to jump on injured companies. I want to jump on companies that are strong, that are bullish. But Joel ain't buying it up here at 355, 360. You got to get out. You got to be crazy if I'm going to pay 360, 355 for this company, seeing that it was at 360. Someone tell me what the beta is of this company. The beta is what? The beta is it a high beta or a low beta? High beta or low beta? Are we dealing with a Honda Accord or are we dealing with a Ferrari? 0.41. Low beta. So I can feel comfortable buying this stock because in the last 5 years, it's up 140%. And even if I look at these dips, guys, 306 to 244. That's not that bad. That's bad, but that ain't that bad. The last time it dropped before that, it was 252. It dropped to 209. The last time it dropped before that, it was 247, dropped to 204. So when it drops, guys, even over I'm looking at a chart that lasted 5 years. Thank you for the corgi. Who sent that? Thank you for the corgi. Glow with me. I appreciate that. My favorite 4 journeys. Thank you for the paper crane. So with a low beta, I can feel comfortable with this company, and it's got a 1.75% dividend. Ooh. I'm making as much as some of you guys are making on your CDs, and I'm dealing with a company that's averaging 30% a year. Okay, y'all are acting stupid up in here. Thank you for the galaxy. My favorite 4 journeys. I appreciate that. Thank you for dropping in and supporting. So just make sure you understand, what you guys are doing. I appreciate that, Mad Pac-Man, for the gold chains. That's right, the gold chains. I appreciate that. So guys, I'm not buying this at the highs. But you know what? Who sent that? Who sent this company? This is why I like rooms like this. Although I have thousands of stocks in my head, there's thousands of companies, guys, and I don't know what all these companies are doing at all times. General Dynamics is going to be on my watch list now. I'm like, well, dang, what's going on with General Dynamics? It's been averaging 30%. It's at all-time highs. For the last 5 years, the biggest drop was like maybe 20%. I'm dealing with a bullish company that's healthy, that's doing something right, but I ain't buying it at 355. I'm going to chill and wait for it to drop 10 or 15% because every stock is going to drop at some point. It doesn't mean that it's the end of the world. It just means that that's what companies with this type of beta do. They drop, you buy, you let them go higher. Okay? Good job. What's another one? You bought an option this morning on this company? C Uzo? All right. Exxon. That's a good one. Exxon Mobil. Let's see what good old Exxon did. All right. So we're going to look at the 1 year chart. Is the 1 year chart on Exxon bullish or bearish? Bullish or bearish? 1 year chart. Let me know in the comment section if you can use the stickers. That would help. It's bullish, it's bullish, it's bullish, 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 bullish. We all see the same thing. You're dealing with a very healthy company. Can someone tell me how much it's up over the last year? How much is Exxon up over the last year? Good job. 18%. Y'all need to grab Caffrey, yo. Caffrey be on it. Caffrey gonna make you some money. And Barrera too. They be coming up with the answers quick. Mad Pac-Man, appreciate that too. It's up 16%. So guys, anybody that's buying this stock thinking that it's gonna grow 400, 500% in the next year, you're not being realistic. Now watch this. When you pull up the 5 year chart, the 5 year chart, Exxon is up 188%. You are dealing with a very, 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 very bullish company. Okay. Y'all see that chart? This is the kind of company that you buy on dips. It's a bullish, strong company. It's not injured at all. But it does fall every now and then. Even bullish companies, guys, drop. Back in 2023, Exxon dropped from 117 to 95. In 2024, it dropped from 120 to 108. In late 2024, it dropped from $126 to $104. So what are you guys seeing? Just that fast in 1 minute, I see, Exxon drops about 15, 20%. Look at the beta. The beta is even lower than General Dynamics. And look at the dividend. 3.36%. Unbelievable. You're talking about a bullish company giving you a 3% dividend. But I'm going to ask you guys something. What is the 52-week range? What is the 52-week range on this bad boy? Please tell me. And then I need to know, by looking at the 52-week range, are we at the highest price or the lowest price? We're at all-time highs. Hey, guys, is Joe buying this stock today? Can somebody, y'all know me. Is Joe buying this stock today? What would what would Whitney Houston say? Whitney Houston would say, "Hell to the no." Now listen, it doesn't mean that Exxon can't go to 200. See, here's the thing, guys. Even if Exxon just explodes in price and goes to 200, so what? Even if it goes to 200, it's going to drop 20% one day. So let's say Exxon goes to 200 and I miss out on it. What's 20% of 200? 20% of 200 is $40. That means at some point it's probably going to drop from 200 down $40 to 160. Maybe I buy this $40 higher. Who cares? Because it went to 200. See, I don't want you guys to get FOMO, fear of missing out. FOMO stands for fear of missing out. Fear of missing out. FOMO is fear of missing out. A lot of you guys will buy something because you're scared that it's going to run away from you and never come back. Oh, it's going to come back. It's going to come back 10 or 20% within the next year. You just got to be patient and wait for that to happen. Okay. All right. Somebody give me another one. You guys are doing well. Normally, guys, when we do these sessions, I look at about 100 companies. I'm in education mode now. So you're going to see more rants. You're going to see a lot of anger because my newbies who don't know about the market, I have to make sure that you understand the anger and the fear that's out there in the market with other educators, other teachers, and other things that might happen in the market. And I want to give you guys the confidence to be able to know when to say no and when to say, hey, I might go another particular route. Or, you know what, this isn't working. I need to go with what is working. See, in the stock market, you got to go with what's working. You got to, or you're going to be in jail. You're going to be in, in trading or investing jail. And I don't want that for anyone. So, don't take my anger and don't take my ranting, because it can be negative, but it's negative for a reason. I don't want you guys to feel that way. This is therapeutic for me. I've done thousands of consultations. Most of the consultations I have, you guys are crying on my shoulder. And I have to take in that energy. And I have to be able to make sure that we get on the right path. So different people do different things to allow themselves to take in that energy and then release it. Because if you hold in that energy, it can do bad things to you. All right, what's the next one? Ondas? You got me on that one, Lisa. Ondas? I think you gave me that one the other day. Or maybe you didn't. ONDS? All right, you guys know the plan. 1 year chart, let me know if it's a bullish or bearish company. What color is it? What color is it? Green, 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 green. So is it bullish or bearish? Is it bullish or bearish? It is bullish. Good job. You see how you guys are learning how to buy great companies? But somebody tell me this. Is Joe buying this stock today? I don't care what this stock did. Is Joe buying this stock today? This stock is up 347% in 1 year. Please, somebody tell me, is Joel buying it today? Joel ain't afraid of FOMO. Now, I want y'all to see a number. Can somebody tell me what the beta is of this company? Y'all ain't seen a beta this high since we've done this. The beta is you are dealing with a McLaren. You are dealing with a Bugatti. You are dealing with a Ferrari. So when you in that Ferrari or that Bugatti, that bad boy is moving. But if it ever got into a crash or if it hit a wall, you're going to be in trouble. Now, I'm not talking negative of the company. I'm just talking about when it turns down in value. The last time this stock hit $11, watch this, guys. The beta is so high, I didn't need any indicators. I didn't need any class. I just needed math. 2.4 beta means it's one of the highest beta companies on the planet. The highest beta companies on the planet is not if they're going to drop 50%, it's when. And they're going to do it within the next 365 days. I could have simply said $11.20 is the high. $11 divided by 2 is $5.50. I ain't buying this company until it drops to $5.50. Now, what gave me the confidence of buying it? Because it's a strong bullish company. I didn't look at the last 10 days. I didn't look at the last 3 months, guys. I looked at the last year. In the last year, it was bullish. Great. But I ain't buying it here. You got to be kidding me. Ain't no, what do I look like? Bobo the fool? I ain't buying this at $12.53. I don't care how much money y'all made. I'm buying everything on sale, period. Period. $5.50 is my number. And then I will sit back and wait for it. Now, here's the thing, guys. When it dropped to $5.50, I promise you the whole world said that this company was coming to an end. That's what happens. That's what they do. They have to push the stock down and they got to get everybody out of it. But what you know now is you can look at it and say, oh, it's a bullish company. See, there are terrible companies that fall 50%. One of them was what? We were looking at UNH earlier. Guys, UNH is a bearish company. It's not a bullish company like this one. It's injured. I'm in it also, but I said to myself, I'm willing to wait a couple of years because here's the thing. I don't have all of my funds invested in UNH yet. I still got a little bit of powder on the side where I can dollar cost average, expecting it to go down. The 5-year chart of Ondas is red, though. Y'all see that? The 5-year chart is red. Interesting. Dang, it just turned green in front of our eyes. Oh, wait, hold up. That bad boy. Oh, okay. Nah, it's still red. Huh, interesting. So over 5 years, it says that it's up 34%, but the chart is red. Every now and then you'll see something like that. I would just say if it's up 34% and the chart is still red, just consider that as neutral. It's over 5 years you would have just made the same amount of money. Is this the moment that ONS is about to explode in value? I don't know. But I ain't buying it at $13. You got to be kidding me, because think about this. Let's say this $11 or $12 that is sitting at goes to 20. Think about it. I want you guys to think about this. You're dealing with a 2.5 beta company. If this company goes from $12 to 24, if it goes from $12 to 24, it's going to double in price. I'm going to miss out on it. But because it's a 2.4 beta company, it's coming right back to 12. You see what I just did? So I don't have to get in right here. Let that bad boy go up and then come back to 12. And then I get in because, see, when I buy companies, I want them to immediately start going up. I don't want to wait a year or two. I'm doing that in UNH just because it's an anomaly. Every now and then I'll take a chance on something like UNH. But y'all know what? This is the third time I'm buying UNH. I've been in UNH, out of UNH, in UNH, out of UNH. This is my third time in. Because I told y'all I don't like pain. I don't like red in my portfolio. I like green. Green. I don't like red. All right. Okay, we're getting close to the end. Let me do one more stock. Thank you, moderators, for staying on after 7:30. But I needed your help today. All right, we got Cell H. So let's pull up Cell H. Hope you guys are having fun. This is fun to me because it's now easy to buy these particular companies. For so long, I didn't understand it. All right, is this a bullish company or or a bearish company? Celsius Holdings. I hear about this company all the time. Is this a bullish or a bearish company? Bullish or bearish? We are dealing with, use the, I like what Joe's doing. Joe's using those stickers. Appreciate it, Joe. It's bullish. Somebody pin Joe's name. I got it. It is. Uh-oh. Why won't it pin? Oh, there we go. It's bullish. In 1 year, Celsius Holdings is up 66%. The 52-week high, where are we at? Are we at the highs or the lows? Ooh, this is a good one. Are we at the highs or the lows? What is the 52-week range of Celsius? In the last year, what was the lowest price and the highest price? I want that information fast. We got a bullish company. It's up 67% for the year. What is this 52-week range? You guys got to learn how to do this. Remember, by Monday, you guys are going to be able to do this in 20, 15, 20 seconds. I'm going to give you a minute, but you guys are going to do this in 15, 20 seconds. I told you I'm going to make you guys the best stock jocks in your family. All right, I need an answer. What's the 52-week range? Raymond gave us the right answer. Come on now. Y'all let a 70-year-old man beat y'all to the punch? Sorry, Raymond, if you're not 70. Wesley got it. Oh, no, Raymond got it. Guys, the lowest price was $21. The highest price was $66. Ooh, if you caught it at 21, you caught a double, a triple. That is beautiful. Now, here's the thing, guys. Every now and then, you're going to see a beta that doesn't match what you see on the screen. So what I usually do is when I see a stock move that much in that short amount of time, I go read about it. I'm like, yo, there's something going on with this company that's not being shown in the beta. So then I'll look at a 5-year chart. And even the 5-year chart, you'll see that it's up 176%. But look at what happened in 2024. That's why the beta is lower. We have not gone back to its all-time highs. That mean at some point, guys, this company was probably bearish from 2024 to 2025. Actually, from March of 2024 all the way to January of 2025, this company was actually bearish. And this would have been a company that I stayed away from. But like I said, guys, every now and then you'll get a company that actually has a catalyst that can push the stock higher in price. The reason why you didn't get a complete V was because of all the money that it lost from 2024 to 2025. That's why it only went about halfway and then dropped again. That happens when you have an injured company. It's just like somebody who has an ACL tear that automatically has a setback. The company had a setback. It started doing good and then it had a setback and everybody was like, oh, we remember 2024. So in my opinion, this isn't the type of company that I would buy per se, but I do like the 1-year chart. Now, the highest price, what's the 52-week range of this stock? 21 to 66. If it's 21 to 66 and I see a low beta like that, $66 times what? If I think it's going to drop 10 or 20%, that's only like, 10% of 66 is, around $7. So a $66 stock that drops $7 is going to put you around the 60-59 range. Something happened in November where the stock plummeted and it's trying to recover right now. So in my opinion, you're still dealing with a bullish company. You're dealing with a bullish company that for some odd reasons, it sells off like really, 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 really hard. So be careful with this company because it's a bullish company, but it's not a true bullish company. I like to see a steady move up. I don't like these big swings up and big swings down and big swings up and down when it has a low beta like that. Big swings are great when it's a high beta, not good when it's a low beta. When it's a low beta, you almost have to, I don't want to say you got to really really know the company and what they're doing to feel comfortable, because even if I was in something like this, I would feel like any given day it can drop 20 or 30%, and it's supposed to have a low beta. All right. So just be careful. Okay. Great. All right, guys, that's 2 hours. So, I'm happy that you guys came in. If you didn't hear, there's a couple of things that I have going on. The super fans. There is a Superfan Live every Sunday for my beginners. If I can't do it on Sundays, and I'm not going to be able to do it this coming Sunday, I'm going to do it the following Monday. So next Monday, I'm doing a 2-hour Superfan just for my beginners, those people that are lost looking at these charts. What we're going to try to cover is everything that we talked about that week. Any questions that you guys have, you can come into the room. We had a great panel on Sunday. On this Superfan Monday that I'm going to have on Monday, I'm also going to talk about maybe 10 to 20 companies that I see that are on sale. All right. So if you come to that Superfan Live, I'm going to give you guys a list of companies that I'm even thinking about buying, so that I'm doing a lot of the homework for you. I still want you to take that information and make sure that you do your due diligence and make sure that that everything is right. Hold on, let me sorry about that. I lost my screen. I'm also going to do Superfan Live starting tomorrow for my day traders. My day traders for years have been wanting me to come into the market and show you live charts as they're happening. Now, it doesn't mean that I'm necessarily buying them. I do most of my day trading before 12 o'clock, but I will show you the live chart. And if you're in things, I will analyze something that you're in at that time for the day, so that I can see it from my side. Other day traders can see it. We can talk day trading lingo. But I wanted to give my day traders something also, because I'm communicating with beginners, advanced traders, forex traders, futures traders, options traders, crypto traders, and I'm using the same strategy in all of those different asset classes. So that's what you get with me, a universal method of being able to trade everything, because I'm teaching you guys price action. So a lot of you day traders can come in during the day at 1 o'clock, and from 1 to 2 o'clock, I'll have sessions, and it's only going to be for your super fans. So Superfan Lives every Sunday, 4 to 6, or Mondays if I can't do it that Sunday. What I'm also offering you guys is I'm making sure that you guys know that we're engaging 3 times in the room. So for people that are trying to find like-minded traders and investors in this particular community, at the beginning of the session, I'm going to play music 3 times during the sessions. At the beginning of the session, which is at 6 o'clock, I'm also going to play music at 7 o'clock, and it's only one song. So don't think I'm just going to be sitting up here dancing for like we at the club. One song. During that one song, I want you guys to engage with each other. This is going to be an engagement room, as well as a room that you're going to be able to educate yourself with. It's the 3 C's, right? Look, I done forgot what the 3 C's stood for. What were the 3 C's? I forgot that fast. But whatever the case, it's the 3 C's. All right, so you guys are gonna be able to engage with each other. We're gonna work on our cash positions, which I'm pretty sure that wasn't what one of the C's were. And we're gonna gain confidence in the stock market, right? So I'm gonna put on. I've been doing this, every session. I put on music. During that particular music, if you want to go ahead and help me reach my live goal, that's going to help the room. Anyone that hasn't become a super fan, that's going to give you time to go ahead and come up here, because I know you're engaged and you want to learn, but make sure that you go and Become a super fan if you can, and then show some love to my supporters, my top 10 that are in this particular box right here. And I will see you guys. Oh, capital, confidence, and connection. So when you come into this room, we're going to work on the 3 C's. We're going to work on our capital. We're going to work on our confidence in the market, and we're going to work on our connections. All right, cool. So I'm finally getting a format that I like for the room. I'm all about patterns and making sure that I can give you guys everything and that you guys know exactly what's coming at whatever time. So I appreciate the support. Again, I've only been on here for about 70 days. If you want to be a live host like